Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the Aussie versus US dollar. Today's date is June 7, 2024. Let's get started. The Aussie dollar is one of the weakest of the major currencies traded today. It, along with the New Zealand dollar, is getting hit. Why? Because the US dollar is moving higher. We're seeing commodity prices move sharply lower as a result. Worries about slower growth and so on and so forth is having traders looking toward the risk off, and that's often manifests itself in the Aussie versus US dollar, especially with the commodity prices moving sharply lower. So that is a fundamental story. From the technical perspective, we're also seeing weakness in this currency pair, and I'll outline some of those levels in this video right through here. And if we could take a look at these lows through here, these are recent lows this week and last week, some low prices that base the currency pair. And that area came in around the 0.6626 level. I'm going to put a horizontal line there. Well, it ends up being an arrow, but you know what I mean. And we had some, these lows through here where the price bottomed against this level before moving to the upside. And then we came back down. We tested this level. We moved higher. And in trading here today, what did we do? We broke below that level. You see this green line right here. This green line represents the 200 bar moving average on the 4-hour chart, and that also was broken on the initial move to the downside here, and then we saw a little bit of rebound traded above and below the level here as the market tried to figure out what it wanted to do. But clearly this level was going to be resistance, and indeed it didn't get closer with the high price right here before the market rotated back to the downside. And the next move to the downside is now seeing the price move down to test the 38.2% retracement. That 38.2% retracement, if I could go back in time here, would start back here on this day right here, which is April 19th, and it takes the price up here to the high price that we saw in the month of May, and a 38.2% retracement of that move to the upside. I'm going to follow this line up through here, so it comes down from down there. The 38.2 comes in at the 0.6579 level, and most people know that. What I like to see when the market trends, and it trended from that April low to the May high, was that the market then cracks and goes below the 38.2% retracement. Now this move, this initial move to the downside fell short of it. This move back to the downside fell short of it. But this move here today had hit right on that 38.2. That, by the way, that happened to correspond with this low right here. It wasn't 38.2% at that time, but it was a level of importance. And I've also outlined other levels through here that kind of formed a ceiling through here, and then a floor through here, and then a ceiling through here. The market's trying to figure out what it wants to do back here before breaking to the upside, retesting the old floor / ceiling level here before moving to the upside. So that is another area of support down here between the 0.6579 and 0.6585. So what now? Well, what now is that we've hit the 38.2% target. Now it's up to the sellers to, well, are they going to take more control and push the price next down to the 100-day moving average at 0.6561? If it's able to get to that level and get through that level, then we'll look toward the 50% retracement. The same move to the upside, and the 200-day moving average. Those will be the next targets on the downside if we can get below the 38.2% retracement. Right now, we are seeing dip buyers against the 38.2% retracement. What are they hoping for? Well, they're hoping for a rebound back to the upside, and if they can get and stay above this 0.6590 level, that's this level right here, which represented near this low and this low right here, then get above that level and stay above that level, then perhaps there's an opportunity for the market to move back up to our 200 bar moving average up here. But I would think that given the sharp move today, given the fundamentals that we see in the U.S. In particular, the dollar strength, maybe the thoughts that lower growth ahead and lower commodity prices, that the Aussie versus US dollar might be under pressure as a result of that. So look for sellers against this level if we do get that bounce to the upside. But understand also that the sellers are more in control right now, and going forward, it would take a move above this level to increase the bullish bias. Absent that, and although the 38.2% retracement is holding here, we I would expect that the price move back down toward the, perhaps these levels right here, and test those levels, and let's see what happens from that perspective. But that's a technical look at the Aussie versus US dollar as we head toward the end of this trading week and toward the beginning of the new trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.